Hello, guys. First, coming to the introduction, generally, the economic policy will be of two will be divided into two. One is monetary policy, and second is the fiscal policy. Fiscal policy is controlled by the our elected governments, that is the state and central government, and the monetary policy will be controlled by RBI in India. So RBI will review its monetary policy for every 2 months with with a meeting called as monetary policy committee meeting. It will be held for every 2 months. Latestly, the monetary policy committee has met between the August 3 and 5. Coming to the what are the outcomes of it and what are the observations of the monetary policy committee that went between August 3 and August 5. On the basis of the assessment of the current and evolving macroeconomic situation, the Monetary Policy Committee at its meeting today decided to increase the policy repo rate under the liquidity adjustment facility by 50 basis points to 5.40% with immediate effect. What is liquidity adjustment facility and repo rate? That is the repo rate. The repo rate is the rate at which the RBI will lend its money to the banks. So that is, if any bank requires some money immediately, or if a bank does not able to get deposits from the depositors enoughly and want to lend more, then that bank will approach the RBI for the liquidity. At that time, the RBI will lend the required money with some interest rate. Call it as the repo rate. Now that repo rate was increased by 50 basis points to 5.40%. Consequently, the standing deposit facility rate stands adjusted to 5.15% and marginal standing facility rate and the bank rate to 5.65%. The Monetary Policy Committee also decided to remain focused on withdrawal of accommodation to ensure the inflation remains within the target going forward while supporting growth. These decisions are in consonance with the objective of achieving the medium-term target for consumer price index inflation of 4% with a band of plus or minus 2% while supporting growth. The main considerations underlying the decision are set in the statement below. Assessment Global Economy. Since the MPC's meeting on June 2022, the global economic and financial environment has deteriorated with the combined impact of monetary policy tightening across the world and the persisting war in Europe. In Europe, heightening risks of recession. Gripped by risk aversion, global financial markets have experienced surges in volatility and large sell-offs. The US dollar index soared to a two-decade high in July. Both advanced economies and emerging market economies witnessed a weakening of their currencies against US dollar. Emerging economies are experiencing capital outflows and reserve losses, which are exacerbating risks to their growth and financial stability. Coming to the findings of the domestic economic activity remains resilient. As of August 4, 2022, the southwest monsoon in rainfall was 6% above the long period average. Kharif sowing was picking up. High frequency indicators of activity in the industrial and services sectors are holding up. Urban demand is strengthening while our rural demand is gradually catching up. Merchandise exports recorded a growth of 24.5% during April to June 2022, with some moderation in July. Non-oil, non-gold imports were robust, indicating strengthening domestic demand. CPI inflation eased to 7.0% year-on-year during May to June 2022 from 7.8% in April, although it persists above the upper tolerance band. Food inflation has registered some moderation, especially with the softening of edible oil prices and deepening deflation in pulses index. Fuel inflation moved back to double digits in June, primarily due to rising LPG and kerosene prices. with core inflation (CPI) excluding food and fuel moderated in May to June to full direct impact of the cut in excise duties on petrol and diesel pump prices affected on May 22, 2022. It remains at elevated levels. Overall system liquidity continues in surplus with average daily absorption under the LAF at rupees 3.8 lakh crore during June to July. Money supply and bank credit for commercial banks rose year-on-year by 7.9% and 14.0% respectively as on July 15, 2022. India's foreign exchange reserves were placed at US dollar 573.9 billion as on July 29, 2022. Coming to outlook, spillovers from geopolitical shocks are imparting considerable uncertainty to the inflation trajectory. More recently, food and metal prices have come off their peaks. International crude oil prices have eased in recent weeks, but remain elevated and volatile on supply concerns, even as the global demand outlook is weakening. The appreciation of the US dollar can be feed into imported inflation pressures. Rising tariffs showing augurs well for domestic food and price outlook. The shortfall in paddy sowing, however, needs to be watched closely. Although stocks of rice are well above the buffer norms, firms polled in Reserve Bank's enterprise surveys expect input cost pressures to soften across the sectors. Yes, H2 is half year, second half year of a financial year. Financial year is from March of a year to April of a year to next March ending of the next year. Cost pressures are, however, expected to get increasingly transmitted to output prices across manufacturing and services sectors. Taking into the account these factors and on the assumption of a normal monsoon in 2022, an average crude oil price of Indian basket of US dollar 105 per barrel, the inflation projection is retained at 6.7% in 2022-2023, with quarter 2 at 7.1% and quarter 3 at 6.4% and at quarter 4 at 5.8%, and risks evenly balanced. CPI inflation for quarter 1 of 2023 to 2024 is projected at 5.0%. On the outlook for growth, rural consumption is expected to benefit from brightening agricultural prospects, the demand for contact-intensive services, and improvement in business and consumer sentiment should bolster directionary spending and urban consumption, discretionary spending and urban consumption. Investment activity is expected to get support from government's capex push, improving bank credit, rising capacity utilization. Firms polled in the Reserve Bank's Industrial Outlook Survey expect sequential expansion in production volumes and new orders in quarter 2 of 2022-23, which is likely to sustain through quarter 4. On the other hand, elevated risk emanating from protracted geopolitical tensions, the upsurge in global financial market volatility and tightening global financial conditions continue to weigh heavily on the outlook. Taking all these factors into consideration, the real GDP growth projection for 2022 to 2023 is retained at 7.2%, with quarter 1 at 16.2%, quarter 2 at 6.2%, quarter 3 at 4.1%, and quarter 4 at 4.0%, and risk broadly balanced. Real GDP growth for quarter 1 of 23-24 is projected at 6.7%. Headline inflation has recently flattened and the supply outlook is improving, helped by some easing of global supply constraints. The MPC, however, noted that inflation is projected to remain above the upper tolerance level of 6% through the first 3 quarters of 2022 to 2023, entailing the risk of destabilizing inflation expectations and triggering second round effects. Given the elevated level of inflation and resilience in domestic economic activity, the MPC took the view and that further calibrated monetary policy action is needed to contain inflationary pressures, pull back headline inflation with the tolerance band closer to the target, and keep inflation expectations anchored so as to ensure that growth is sustained. Accordingly, the MPC decided to increase the policy repo rate by 50 basis points to 5.40% The MPC also decided to remain focused on withdrawal of accommodation to ensure that inflation remains within the target going forward while supporting growth. All members of MPC, Dr. Shashanka Bide, Dr. Ashima Goyal, Professor Jayanti R. Verma, Dr. Rajiv Ranjan, Dr. Michael Debabrata Patra, and Sri Shakti Kantadas unanimously voted to increase policy repo rate by 50 basis points to 5.40%. All members voted to remain focused on withdrawal of accommodation to ensure the inflation remains within the target going forward while supporting growth. While Professor Jayant R. Verma expressed reservations on this part of the resolution. The minutes of MPC meeting will be published on August 19, 2022. The next meeting of the Monetary Policy Committee is scheduled during September 28 to 30, 2022. So the content that I had read to you, this all the monetary policy findings and the outcome that these I had taken from the press release of the Reserve Bank of India. I will keep the link in the in this video description of that press release. If you want to read it directly, yes, you can go. If you can click that link and it will be open in the website of your device, so you can read that. Thank you.